economic analysis for, wait a second, for policy alternatives, something that still very much resonates in your focus on the role of knowledge and expertise in economic alternatives, I assume, something that still has a place in your research. You were also a budget forecaster for the House of Commons Standing Committee on Finance, so also an engagement with policy that gave you the idea of how actually knowledge is relevant, but also difficult to inject. You hold a PhD in economics from the University of Massachusetts. Your research focuses, as I already said, on economic alternatives, political economy, culture, policy, public policy, discourse analysis, and economic argumentation in specific, with a view to labor market, financial regulations, and austerity programs. And with that, you very much work on questions that we discussed around the keyword, or rather the catchphrase of policy, of knowledge brokerage, knowledge brokerage for impact of economic ideas on human lives and on policies. Currently, your focus is on the formation of economic expectations and how such expectations have policy consequences and are argumentatively integrated into politics and policy debates. You also look specifically, I assume, inspired by COVID, at least on the impact of unprecedented social and political context on events and how then economic argumentation is taking place. And in this area, your presentation is also anchored. Olivier Samson is PhD student of political economy at the University of Quebec and works together with Ellen in the research they are conducting. And today we're listening to questions of epistemic authority of central banks on the future course of inflation and how transparency and public scrutiny plays into this argumentation, and specifically into central banks' communication around monetary policy, which will be very interesting under the condition of uncertainties and I assume also unprecedented levels of uncertainties for monetary policy. The research has a focus on the Bank of Canada's inflation forecasting patterns, but my understanding is that we will also hear about these questions of uncertainty, transparency, and public scrutiny in monetary policy and how that impacts on the expert authority of central banks. Great pleasure, Ellen, to have you here, and Olivier, to have you here as well, and over to you.
Thanks very much, Gabby, and thanks everybody for your organizational efforts getting this event happening. Okay, so a little bit of housekeeping before I start. I'm going to do the fun stuff, and Olivier is going to do the hard stuff later, so you can ask the tough questions to him. And I want to sort of say something about how I'm likely to use some words. So I'm looking at economists as experts. So I took quite seriously our cluster title. So that is to say, expert knowledge, expert authority in transformative time. So each of those bits there are going to figure prominently. So I'm looking at economists as experts, particularly in their capacity as offering predictive guidance about future economic states. Okay, so that future orientedness is crucial to the argument. So if, for example, economic forecasts about what's inflation going to be at some point. And I say the term economists as though it's a singular person, but I really mean any entity that's publishing these kinds of economic forecasts. So typically institutions like a central bank, but I might just say economist and just read for that, you know, whatever the context supplies. Okay, so expert knowledge. Here's what I'm thinking when I think expert knowledge is that like it emerges within a certain disciplinary context, which has some sort of rigorous processes for assembling information and methods of managing that information and analyzing it to formulate at least tentative conclusions. And then there is this evolving quality where those are debated and refined and reconsidered sometimes, or some sort of technical improvement is made possible, so that within that epistemic community we have a sense that like it is a progression of knowledge forward. And expert knowledge has a kind of credibility, I would say, based on the public perception that this is how disciplines work, that they have debates and they get better at whatever it is that they do. So it is like a kind of presumed rigor and a presumed conformity with those disciplinary standards that, in a sense, bestows a degree of credibility on what is understood to be expert knowledge. So it doesn't have to be perfect, but it is sort of optimal under the circumstances, and there is this sort of intention to improve. So when we use the term evidence-based policy making, I mean, the idea that there is some kind of evidence that has gone through some sort of expert scrutiny helps to kind of reinforce the idea that this is evidence that's not contaminated by a political agenda. And then insofar as anybody's evidence, I mean, imperfections aside, is, forthrightly presented, then it is like the best that we can manage for policymaking processes. Okay, so I think about expert knowledge in a way that's sort of comparable to Kuhnian normal science. So that is to say, it exists within a community of experts who deem what are the characteristics of expert knowledge. These are varied over time or whatever, but there is at least a broad enough consensus about what expert knowledge is that this forms a community of people who are speaking kind of the same language, despite the many debates that they may have. And so they have come up with protocols about how should data be assembled, and what do you do with data inconsistencies or missing, what kind of errors are tolerable and which are not. All of these things get continuously litigated. But there needs to be sufficient consensus within this group that we can call something good enough to approximate knowledge for policy purposes. So if expert knowledge conforms to all of those requisites which were meant to sort of, insofar as we can, assure ourselves of the integrity of this expert knowledge, then who cares about authority? Like, why should that even come up? I mean, if, like, to the best of my ability, I've added 2 + 2 and come up with 4, you don't ask, oh, Ellen, what's your reputation? Like, we imagine it can be verified by doing the math as opposed to looking at the characteristics of the mathematician. So the authority of the person performing the expert knowledge is, irrelevant in that scenario. So is the issue that, okay, I want my knowledge to be as pristine as possible, so like it's not contaminated with obvious bias, even though, we're never going to get it perfect. And then I have to kind of assess to what extent do I think these purveyors of knowledge have, done their best effort at giving me a knowledge that's uncontaminated with some kind of, advocacy, say. So this puts me as a recipient of this expert knowledge, in a tricky situation. If I have to assess the authority that I confer on this knowledge, we're already in a terrain of persuasion, because I am needing to make a judgment about the degree to which I feel that the expert knowledge that's been presented to me fits what I would say is sufficient for me to use it as, a basis for me to understand predictions about my economic future, for example. How do I bestow that sort of credibility on this expert knowledge? I mean, is it about the credentials of the entity that's produced it? Because, I mean, the difficulty I face as a consumer of expert knowledge is what Hardwig called in, I think, 85, epistemic dependence. So that is to say, I'm reliant on a form of knowledge that I cannot independently evaluate. So how am I to judge the credibility of something that, I don't know what econometrics is. How can I know if it's been done appropriately? So I am then in a bind. I want to confer authority on the information that I'm presented with, but I have actually no evaluative standards that I can independently implement to know whether this is, done well or not done well. So, in a sense, I can't check the math, but do I believe the math is right? So the way I'm likely to figure out that I believe the math is right is to consult a different expert who can do the math. In a sense, experts are the entities which are policing the knowledge produced by the other experts. This is why we have peer review. My opinion about an oncological article doesn't matter, but I would consult other oncologists who are likely to have be in a better position to evaluate that knowledge. So I rely on experts from internal to an epistemic community to monitor their own production of expertise. So this is a difficult predicament for those who wish to consult expert knowledge. They wish it for its predictive guidance, but they can't evaluate it. And who can? Other experts, which then means I have to assess the credibility I bestow on those other experts who are policing that information for me. Right? So this just never ends. At a certain point, there's a psychological literature called lay epistemology that investigates how do people manage this. So they are, according to lay epistemology, in a process of constant hypothesis formation that never can be conclusively ended because there's no criteria in which say, yes, that is the kind of final uncontestable verdict. So from the lay epistemology perspective, what you do in a circumstance in which you require expert knowledge that you can't evaluate, and you kind of also realize that it's other experts who are litigating all this on your behalf, the lay epistemologists say that what we do is we confirm epistemic authority on some generator of expert knowledge. So, epistemic authority is the extent to which an individual is inclined to treat a source of information as incontrovertible evidence for her or his own judgment. Maybe you confer epistemic authority on your astrologist. But in a policy conversation in which we imagine that this is predicated on the existence of expert knowledge, you are likely to search an expert on which you can bestow this epistemic authority there and therefore adopt with some confidence their expert guidance. Okay, so I have to bestow epistemic authority on some source of predictive guidance. How about a central bank inflation forecast? Well, it has some of the social signals that would connote authority, right? I imagine central bank has pretty good information. I think they probably have a pretty good, group of economists who are like figuring this stuff out. I hear them in the news being cited as being presumably credible indicators of what inflation will be. So I am attentive to all of these signals to then decide, I think I prefer the Bank of Canada's inflation forecast over Ellen Russell's forecast because, I have all of these indications that the Bank of Canada has that kind of epistemic authority. So, and in a sense, this is why we rely on, because we're looking for these connotations of expertise, where we can't evaluate expertise, we rely on things like, well, peer review, right? Which supposes that there's some sort of disciplinary criteria which can surface a relative consensus on what's good research and what is not good research. If there were no kind of convergent disciplinary norms, peer review would be impossible. So it suffices as when I say, I have a peer review article that says something, I don't necessarily look at the details of the peer review because I know I can't follow it in that area of expertise. I'm content that it was peer-reviewed article. And in that way, connoting, some degree of reliability that I wouldn't connote on Ellen Russell's article that has no such peer review. Okay, so other markers of expertise, expert knowledge, credibility, status in a prestigious institution, for example, would be one such thing. Publication record, any of those things that are taken to mean that some panel of experts has adjudicated this person and appointed them to that prestigious position or given them that Nobel Prize or something because their work has value. Okay, so if some entity has very compelling epistemic authority, i.e., I don't know what they're doing, but I believe they're doing it the right way, then this is the so-called reverence effect. I super love that term. A reverence effect is like the degree to which you have basically the prevailing perception that the expert is right. And that terminates your hypothesis generation cycle. And you say, fine, that's my answer. So in the event that central banks have sufficient reverence, like the epistemic authority that has persuaded us to adopt their expectational guidance, I have the following question. Is there the possibility that this expert knowledge and authority interface provokes the following question? Are there scenarios in which the use of that expert authority to proclaim some sort of predictive guidance could impact the accuracy of that predictive guidance? So let's take an inflation forecast. The public needs to set some, wages and prices, and maybe they consult the central bank's inflation forecast as a way of doing this. In that event, the inflation forecast says it's going to be 2%. And believing this, they do their various economic behaviors, which tends to produce an inflation rate of 2%. Obviously, not the only factor in what will ultimately be the inflation rate. But if people believe that it's going to be 2% and that's what they do in their wage and price setting, more likely than it would have been otherwise. So that's the idea behind inflation anchoring articulated by central banks, right? That by persuading the public that a 2% anchor is likely to persist as the inflation rate, then the public will adopt that expectation, thereby making it more likely that it will be 2%. So this would be the wrong page, not right page. A way in which the epistemic authority of the central bank, by influencing that expectational consensus, enhances the efficacy of monetary policy. Now, I have to be careful here, okay, because this is predicated on so many different conditions of felicity, as they say, which may mitigate this effect or detract from this effect. So we have to put this in situ for sure. But if a central bank has sufficient epistemic authority such that the public adopts their expectational guidance, then the inflation forecast will be more accurate than it otherwise would be, to the extent that this epistemic authority is generating these self-reinforcing effects. Okay. Then that puts central bank communication maybe over the line into persuasion. Is not merely communicating, a forecast, but communicating it with the intent of creating the expectational consensus which is most conducive to monetary policy success, thereby potentially impacting the central bank's interpretation of what's transparency. They would like to be forthcoming about details that seem to confirm the 2% target. They're probably less interested in being forthcoming about whatever information might contradict the likelihood that that target is forthcoming. To an extent, I've got a lot of asterisks in this talk. I was on a hike and I was with a physician who I was explaining this to. And he said, oh, that's the placebo effect. And I thought placebos are like sugar pills that are ineffective. Like, I'm not going to call monetary policy has no effect. Like, it's not, this is not a total parallel. But what he says is, no. It's not the administration of a completely ineffective medicine. It's the administration of a potentially effective medicine whose effect is amplified by the expectation of the patient taking it. So it turns out there's a ton of placebo literature out there that actually investigate how the expectations and the administration of treatment might interact. Example, there's an interesting study where postoperative knee pain is the study. They split the patients into the two groups. One is given morphine with the sentence delivered by a doctor in a white coat in a hospital and all that, with the sentence, "This will reduce your pain." The other group, given the same dose of morphine covertly, no sentence saying this will reduce your pain. And of course, well, this would confirm my point. The people told that their pain was going to be reduced had reported less pain. And they replicate this kind of thing across all kinds of medical fields. So it's not that the treatment is ineffective. It's that the expectations around the likely outcome of the treatment might affect the likely outcome of the treatment. Anyhow, it's not a perfect analogy to monetary policy, but I found it provocative. So I want to talk transparency for a moment. Specifically, I got interested in this with the Central Bank Transparency Code of the IMF in 2020. And it's a very long code. It has, 50-ish actions that central banks can take that are deemed to be consistent with enhancing transparency, but it doesn't actually define transparency. So I guess you're meant to sort of contextually draw your own conclusion about what works in your context. They explicitly claim the following two benefits. They do other things too, but in their intro, two primary benefits that they highlight. This transparency enhances policy effectiveness and accountability. Okay, accountability. We all know this literature of like they're not democratic institutions, and so they ought to tell us what they're doing to be somewhat accountable to the politicians, which might reappoint the next central banker or whatever. Policy efficacy. Why should telling the public about monetary policy increase the efficacy of monetary policy? Well, they say they are interested in expectations management. So that is to say, they want to encourage the public to anchor, that is the term, anchor inflation expectations to the target rate. And I would say in felicitous conditions, then policy efficacy is enhanced to the extent that it unleashes that self-fulfilling expectational dynamic in which, I think it's going to be 2%. I do stuff that is more likely to make it 2%, which makes me think it'll be 2%, et cetera. Okay, so there are scenarios where policy effectiveness and accountability might be closely aligned. So imagine a scenario where there's a low and stable target inflation rate that has been predicted and realized over time. And, so then inflationary expectations kind of supports that outcome in a, relatively, placid way. But then the scenario potential conflict between policy effectiveness and accountability. So let's say a central bank foresees accelerating and persistent inflation above the target, and they transparently disclose that. Well, if the public is clear that the central bank thinks it's going to miss their target, this has the possibility of de-anchoring inflationary expectations and thus detracting from policy efficacy. So in this event, a central bank that wants a stable and inflation rate anchored to 2% is probably going to be inclined to minimize the indications of higher future inflation that would create that inhospitable expectational dynamic. Or at least represent that inflation as a very brief aberration, which will revert to the sort of normal 2%, quickly. Okay, so I think I've got that done. I'm going to say, let's turn to some work on the Bank of Canada itself, and then I'll circle back after Olivier has spoken to some conclusions. So we are both Canadian, and we decided to check this out through Bank of Canada inflation forecast over, a long period of time. That's the period of time you remember, Olivier, because you looked at those numbers. So it's decades, and we chose the Bank of Canada not only because we're Canadians, but it has a really long history of inflation targeting. It had a pretty stable pre-pandemic monetary policy context. There wasn't any kind of new shift in thinking that the bank signaled. It is deemed to be a institution that, quote, sets a high benchmark for transparency because it was reviewed very soon after the IMF's new transparency policy came into effect and got a glowing record. And they explicitly say to us that, quote, we focus our communications on helping Canadians better understand inflation because their expectations can influence the rise or fall of inflation. So in many ways in their narratives, they do mention that they do this inflation targeting or expectations management. So in what follows that Olivia will present about what we have noticed in their forecasts, the issue I really want to emphasize is not forecast accuracy. We are not attending to how accurate or not these forecasts may be. We are looking only to see, is there any sort of systematic pattern that can be revealed in these forecasts that speaks to the analysis that I just provided? So does the inaccuracy follow any pattern that we would not expect in a series of hypothetically unbiased forecasts? Okay, so Olivia, do you want to speak to the numbers, please?
Yes. I'll share a few charts with you. Okay. Good. So a little word before sharing the results on the data itself. So for our analysis, we worked with the inflation forecasts that were published in the monetary policy reports, which are quarterly reports by the Bank of Canada's Governing Council. So it's not the staff; it's the Governing Council, analogous to the Federal Open Market Committee in the United States. As stated in these reports, the type of target adopted by the Bank of Canada is a target range, so from 1 to 3%. But as we'll see, the Bank of Canada is also attached to the target range midpoint, so the 2% target. We extracted the forecasts from table 3 or whatever number, but the table containing a summary of the projection for Canada in every report from July 29 to 2009, to January 2025. So we started in 2009 because it was the moment at which the Bank of Canada started to publish longer term forecasts. And we ended at the first quarter of 2025 because by the second quarter, there was rising trade uncertainty with the US, which pushed the Bank of Canada to publish multiple forecasting scenarios, which would have complicated a bit the analysis. So what we did with the data, first, we looked at the forecasts by themselves to see what it would tell us. Here, I'm showing you the forecasts published at the beginning of the third quarter of each year for different forecasting horizons. So the label 0Q would mean the forecasts for the current quarter, so a really very short-term forecast. 1Q is for the next quarter, so 1 quarter ahead. And so we see that with these very short-term forecasts, there's a bit of variation. So reflecting the variation in the actual conditions of the economy. But when we add up the longer-term forecasts, so 5 quarters ahead and 9 quarters ahead, we see that the forecasts lose that variation, and that the longer-term inflation rate is virtually always forecasted at a 2% target range midpoint. So this first look gives the intuition that there might exist a bias in favor of reaching the target. But the Bank of Canada could as well be predicting a return to target and consistently achieve it. So to explore a little deeper, we had to compare the projected values with the realized values, which we did in 2 ways. The first way was to explore the length of convergence to target. So what we mean by that is that during the post-pandemic period, there was a long period during which the actual inflation rate was consistently outside the target range of 1 to 3%. And this offered the possibility to compare the projected and realized length of convergence to that target range. And here in blue, we have for each quarter of projection, the actual number of quarters that were required to get back to the target range. And in orange, we have the projected values for each quarter of projection. So what we observe here is that when the inflation picked up by 2021 third quarter, the Bank of Canada started to consistently underestimate the time it would take to attain the target range. And it did so not only in the first year, but also in the year following the inflationary peak of 2022. So this would indicate a potential bias in favor of reaching the target range. And just a little word on the fact that the orange bars actually overstate the length of convergence that was projected, because we didn't want to extrapolate between the forecasts that were published by the Bank of Canada. So there's so this was just reinforce our point here. I won't say more right now, but if I can be more precise if you want. So the other way we analyzed the other way we compared the forecasted with the realized inflation rates was by calculating if there was a forecast error, and when there was errors, to count if the error was in direction of the target or not. And what we mean by in direction of the target is that, for example, a negative error would be realized when the realized inflation rate would be above target, and vice versa. So if for example, the Bank of Canada had projected a 2.5% inflation rate, and if the realized value for that same quarter of projection would have been above 2.5, then we would have an error that would be in direction of the target. So what we observe with this analysis is that the Bank of Canada's forecasts are consistently erring in direction of the target. And this holds not only for longer term forecasts, but also for shorter term forecasts. So the longer the longer the forecasting horizon, the more frequent are the errors in direction of the target. And a small addition to that would be a separation between pre-COVID period and the pandemic period. So what we see is that instead of growing progressively, the direction bias what we see is that during the pandemic period, there is actually a less biased behavior for the current quarter and 1 quarter ahead projection, as reflected in the 57 and 50% in the last row here. But when the forecasting horizon stretches a bit, so starting from the second 2 quarters ahead and 3 quarters ahead, there's a sharp rise in the bias. So every error every error was in direction of the target. So there's a sharper contrast here during the COVID period. So this is an interesting result, though the small number of data points calls for caution in the interpretation, but still it indicates something interesting as to how the bias might shift during an uncertain period. So that would be like the results presented rapidly. Ellen, do you want to interpret? Yeah.
Sure, thanks, Olivier. Okay, so I'll make a fast conclusion so we can do more talking. So the premise in the Central Bank Transparency Code about this complementarity between policy efficacy and accountability, I'm suggesting there's a potential tension that if the requisites of inflation expectation management incentivize a kind of selective understanding of transparency, then the central bank will be more inclined to show evidence that encourages its desired expectational consensus. So this Bank of Canada error pattern is puzzling. Economic forecasters who note that there is some sort of systematic error pattern would be expected to want to inquire and rectify that situation, or at least footnote like why they think there is this problem. That's kind of back to the normal science narrative that I gave you earlier, is that like we presume that they are getting better at what they do. But I would say that this is more suggestive of an intended narrative, that we move quickly towards the target if we're not on the target, particularly in times when they fear that inflationary expectations might become de-anchored. So some concerns. Obviously, central bank narratives have, I don't know how much influence on inflational expectations. Expectations are formed by all kinds of influences in addition to what they might derive from the central bank. But the central banks say they want to do expectation management, at least in the Bank of Canada's case, they explicitly say. And they have very well-resourced communication strategies, which suggest that they do not take this whole activity of communicating with the public lightly. I would suggest that it's a kind of costless opportunity for central banks. If they're able to encourage their preferred expectational consensus, great. If they're not, they had to communicate with the public anyhow. So in a sense, they they may view that as, pretty costless. But I also want to link to the turbulent times part of our economic knowledge, expertise in turbulent times. No, I haven't got authority. Thank you. In turbulent times. Okay, so forecasting is always difficult, but in turbulent times, this is even more challenging. So you have the possibility of shifts that may invalidate your previous understandings of, inflation and the dynamics that are behind its future path. So you are then forecasting in a situation which is, very challenging. If a central bank designs its forecasting to its preferred expectational consensus, I'm going to say 2%, and this has enough systemic epistemic authority to encourage its adoption, but inflation actually turns out to be higher, that the forecasters haven't somehow been able to cope with this turbulent time to get something more accurate. And then again and again, the inflation rate turns out to be higher than what was presented to you. And if we believe in this expert guidance, we are beginning to become disappointed. And it may undermine epistemic authority of experts and economic expertise as such. Because if I perceive that the experts are always, from my perspective, wrong in this area that I care about, then maybe I generate an appetite for some other way of predicting my economic future. I mean, maybe if I can't tell the difference between economists as purveyors of whatever they want to persuade me of and kind of ordinary marketers, then how am I supposed to, deem anything to be knowledge? I mean, how can I distinguish between what I see on TikTok and, what I get from my central bank? So if we see disciplinary expertise as increasingly contaminated by these efforts at persuasion, and we have no means of making a judgment about what actually might be meritorious expertise, then in a way, we discredit expertise. And in a sense, we are complicit in that discrediting, because if the public understands our expertise to be politically or whatever, motivated in some fashion, then there is the possibility of, the people who are happy to peddle conspiracy theories stepping in, and the public is unable to assess, their relative merits. Okay, that's it for us. Let's hear from you.
Great. Thank you very much for the presentation, and also for the conceptual methodological path towards and reflection towards your research. As always, please raise your hands if you want to come in with questions. I might have an initial question/remark on the assumption 0, where I'm wondering if that holds with central banks. So taking your last comment, saying, yeah, but if your inflation forecasts then were wrong over such a long time and always in the same direction, can citizens and market participants, or will they trust you, right? Will they still think that you are an actor that holds the expertise and that you trust so with this epistemological consensus to trust the authority on? Is the expertise of central banks, and that's a bit provocative, the question, is the expertise of central banks not waterproof 1,000%, because they do have the political mandate to act on wrong forecasts? So they say they can say that we don't care whether we are right or not, because in the end we are the guardians. Let's say the German central bank, the European central bank, we are the guardians of monetary policy. If we're wrong, we're working with interest rates. So they do have the political mandate and the authority to act upon their incorrect forecasts. So is a central bank a prototype of actor that would be under the considerations on expertise that you had outlined? Because they do have the mandate of monetary stability, which is combined with interest rates, the power to act on interest rates. So basically, you could say, if you were provocative, we don't care if we're right or not. We do have the political function. Inflation forecasts should increase trust, is a psychological instrument rather than, so it's a market signal rather than really an expert forecast that tells us how the market will develop. I know that this is provocative, but in terms of central banks, I'm referring to the "we will do whatever it takes" moment from Mr. Draghi. They do have a political mandate in the end.
Okay, so I think we might share some things and maybe not share others. So, like central banks, like other entities, have some sort of mandate to do something. So I'm willing to concede that yes, they should do something about whatever their mandate is, and that might mean they use the tools that they first set out, or maybe they go to some other set of tools. Okay, so it's not so much that I don't fault them for being kind of creative or flexible or adapt to conditions or whatever. That's great. They ought to, have those virtues. The thing of it is, I'm going to dramatize what you might have said, and maybe I'm misrepresenting you, but we'll see. Maybe it's useful. If the central bank were to say, actually, we don't really know what inflation is going to be, but you should expect 2%, and we can't tell you why. like that would be total transparency, but obviously it wouldn't help their expectational considerations, right? So, if they begin to understand, then don't claim to be transparent if your job is to fool me into having the expectations you want me to have. That's, then this evidence you present is really kind of decoration on a marketing strategy as opposed to, I don't know, something more reliable. So the problem comes when this efficacy and accountability thing is in such tension that it contaminates the transparency. And that doesn't necessarily happen at every instance, but it might.
Yeah. Transparency defined how? Assumption transparency, information transparency, political transparency, question mark.
Yeah, well, I mean, I understand that you can read off the code and they have so many different variations on what this may mean. And so, yeah, we would have to take some time to pick out precisely the meaning we think works in this context. But I would imagine that we would come up with something that entails that the public can meaningfully decode what you're doing and why, and thereby make some kind of informed judgment about whether they think you've got the right direction for your efforts or not.
Yeah. So that's also, that links very much to all the debates on transparency about modeling, about the assumptions behind economic modeling, so that citizens and the interested public can then at least understand why you have the range.
Can I say something about that? It always puzzles me about this. As though, if I could literally sit down in front of the computer of the forecaster, that would be, perfect transparency or something. It actually wouldn't be transparent at all because, that's the epistemic dependence problem. I don't know. I can't scrutinize those, formula and see whether I think they were done appropriately. So in a way, it's not that they give us more. It's that they give us something that allows us to be critical, consumers of this information. Are you publishing the distributional consequences of your policy move? That might be something. Are you publishing your record of errors in the past? Those kinds of things might help me understand, how much credibility do I,
But also these are already technical information errors. Going through the data that you presented for someone who had worked, but politically on European monetary policy, took me quite a bit to get into, the A variables, B the calculation. So even if if the information is there, I do need, number one, brokers like you are who talk me through the data. But number two, so what transparency in modeling would help is to democratize and to allow civil society organizations to function as knowledge brokers here. Right. So while I, as the end consumer citizen, might not be able to understand, there could be democratic processes in which that is scrutinized.
Yeah, which is great. I mean, the more they make it possible for people of all levels of expertise to access this stuff and make sense of it, great.
Yeah. Great. Thank you. Anna, please come in.
Anna, if you'd like to share your question out loud, you're very welcome. Otherwise, if you have any microphone issues, we can help you from the chat.
Exactly. Okay. Mira, do you want to
Should I proceed? Yeah.
moderate the chat?
And if at any point you want to jump in, please feel free. So we have a question or a comment from Anna in the chat, and actually was indeed thinking of her presentation as you were presenting, Ellen, because she spoke about similar questions of how does the public engage with authority on these common questions. Thank you very much. This is extremely interesting. Building on the analogy with placebo medicines, whose effects are magnified by created expectations, I would like to briefly discuss the issues of epistemic authority, monetary policy, banking institutions, and expectations management. I remember the case of George Soros. His epistemic authority and predictions betting against the British pound earned him the nickname, the man who broke the Bank of England. Thank you, Anna. So I have a feeling that is opening up the question for debates and responses and input.
Yeah, well, thanks, Anna. I mean, it's an intriguing example that you bring forward. I mean, and it presumably George Soros gained influence because he was esteemed for something. And so in that case, it would be like the person who made a good deal of money making a good bet is the person whose information I would bestow more credibility on than, I don't know, some economic forecaster. I mean, then we are really in the realm of like reputation and, I don't know, do I like the car he drives? Or I don't know how far this could go to getting to the point of like, what is it like that would be significant to, or sufficient to establish that this person should guide my expectations. Anybody else want to move on that?
Zane, I do have Zane is the next question.
Yeah. First of all, thank you so much for your presentation. So my apologies if I haven't gotten something quite right regarding the slide for the data set, because I'm from the social sciences and humanities. So, economics is not exactly my background. But what I understand from the dataset slide is that the inflation target range. So there was like a discrepancy in the pandemic years. So it's 2021, 2022, roughly around that, and 2020. And then it was actually bigger than the prognosis, if I understood correctly. Yeah. And then given like that, the prognosis was, well, you could say like an error, or it was not exactly accurate. Do you think, and here I'm going back to the terminology that was explained at the beginning, do you think that these kind of instances of error or, major discrepancies between the projection and the actual, statistical, developments, do they cause any damage to the bestowed academic, this expert authority of the bank? or it's not such a dramatic situation. The reason why I'm asking, because I see parallels with other, like unprecedented shock episodes, such as, for example, Hormuz. I mean, this is a bit similar in a sense that what it has done to the energy markets, unprecedented shocks. And here it's like, if I would be vulgar in a way, it's like, okay, yeah, during the pandemic years, you didn't figure it out correctly. It was so much more, the discrepancy between the actual and the projected was, such a huge one. How can we possibly trust you this time? Yeah. But here I'm being really vulgar because I really liked your idea about this bestowed expert authority. And is that somewhat rigid and it's hard to lose? Or on the opposite, even for public, enduring solid institutions, it might be somewhat, questionable. And then my second question would be, what about the diversity of economists? I know that you were primarily now speaking about one institution, but even that institution itself has so many economists, like niche economists, right? And from each of those angles, depending on, the specific area of specialization. So the reasons why, for example, maybe those projections were not exactly accurate might seem different. For example, okay, some are, in the core of monetary policy and interest rates, but what about the other factors that come into play and really might trigger some, major developments? I would say well, I could refer to intervening variables, so to say. Yeah, if we stick to some, scientific language, such as some major market actors, coming up with major initiatives and then distorting, the situation in an already volatile setting, as these 3 years. And then third, my last question would be, I really liked the earlier remarks about civil society. Could they possibly be the brokers? And I was wondering, because given the rise, the excessive mushrooming, I mean, I don't want to criticize, but it's really excessive mushrooming of think tanks across the Western world, let's say in very general terms. Are these think tankers and civil society whatnot expert hubs, are they adding a fog to the complexity of debates around, for example, some projections issued by the bank? Or on the contrary, they are somehow helping certain parts of society to increase their trust in those projections. Why I'm asking, because oftentimes it is so elusive to me to think about public as a whole, because that so-called public is also comprised with people with different disciplinary backgrounds and professional judgments. So what is actually going wrong and why? That's it from my side. Thank you so much.
Thanks a lot. That gave me a lot to think about, and I think I'll probably miss some stuff. But okay, the easy one is like the second one, I think, which is the diversity of expert opinion, say within a central bank. So I think this is an analysis actually is predicated on that diversity insofar as, like, any epistemic community is understood to have debates among various wings that are within it. So you have the hawks and the doves or something like that, right? It doesn't, but they are still within the same terrain where they, share a good deal of common ground, but they may have a more pessimistic or a more optimistic view of something. And that, I think, bestows credibility on a central bank. If you've got a staff of economists who are reflecting different points of view, it does suggest that you've vetted all possibilities, and whatever your expectational guidance is improved by that process. Okay, so next, the civil society thing in the think tanks. So, do they fog or do they defog, if that's a word, right? And probably both, right? But they seize an opportunity that exists as a sort of intermediary between an expert knowledge that's really hard to parse for people who aren't in that community and people who just need to know something about should they ask for a raise. So that would also be journalists who play that role of communicating what the central bank says, criticizing it potentially, exposing the public to, the same or different points of view, which, amplifies or diminishes those expectational effects that I was talking about. So I don't know. I mean, but like, I think they exist because we can't act, like, even should they give us all the equations, it wouldn't be transparent to us. We need an interpreter. And lastly, I'm not sure I totally got this, but you were talking about sort of major, maybe I should repeat it, but the sort of major upsets as opposed to regular upsets or something.
Yeah, sorry, I guess it was the first one about the slide of data set and, the pandemic year statistics. So it was about 2020, 2021, 2022, when there was this discrepancy between what was the inflation rate target range in terms of, the projected and the actual one. And then given, for example, these were years of utmost unpredictability, yeah, and it was out of any normal circumstances where normal factors that come into play in economic projections would be acting in a somewhat predictable way, right? And then I tried to draw parallels. Okay, so now we had a major shock from Strait of Hormuz regarding energy resources, like a very sharp cut off of literally 20% of the world's energy source. Yeah. So how do you see, like, what could you learn possibly about these discrepancies that were experienced during COVID? Do people tolerate these kind of discrepancies between the projected and the actual? When the statistical picture that I saw on the slide, if I understood it correctly, yeah, pardon that, was there was a significant range of difference, yeah, between the sets. So and is that like contributing to, okay, yeah, we tried our best, but these were unpredictable times. But what does that do to what you refer to as this bestowed expert authority? So in unprecedented moments, like as COVID, the projections were, there was a major discrepancy between the expected and the actual. And so what does that tell about, the next shocks that might come, after Hormuz, like, in 2027, 2028, all kinds of things can happen. Is public, is public educated enough to understand that these kind of, situations occur and experts are doing their best, or they are losing their, so to say, bestowed epistemic authority because of their inability to operate and offer more reliable projections in unprecedented times? I'm sorry, I was a bit long, but yeah, just trying to explain.
I don't think I can give you a satisfactory account to all of the implications of your question, because I mean, this is a whole like psychological and emotional dynamic where, like, who do we trust and why do we trust them? And, how do I, like, it's very, I mean, beyond like obvious things that might connote expertise, it's really hard to know what kind of circumstances provoke a reconsideration of that epistemic authority. I think my guess again is that, like, there's a certain degree of public forgiveness for the fact that nobody knows the future and it's forecasting. It's not whatever a certainty. So, like, and I mean, and I think we can forgive that there are unpredicted and massive events that disrupt the whole apple cart for a while. But even in that event, let's say we have forgiveness for our experts because they don't see these big things coming. I mean, if every forecast you say, sorry, I was wrong last time because there was this new event, you start thinking, why do I even look at forecasts, right? Because there's always going to be an event. So, like, it's a tricky judgment. Anybody else want to weigh in?
Mira, over to you.
Yeah, thank you. Thank you both for your presentation, because it was very interesting, and also speaking to your description of being brokers, and I think Gabby used that word as well. You really adopted that role of brokers, of communicating very well to an audience outside of their discipline. My question is similar to the family of what Jenna was asking just now. And it was about this reverence effect. Fully in the knowledge that, as you said, that we're getting into psychology here, and this is not something that we can necessarily answer. One was about whether there might be a bit of negativity bias that comes in terms of when the public acts on or changes their feeling of trust and reverence based on an incorrect prediction. So whether a prediction that was worse than reality is more likely to stay in the public's brain as a reason no longer to trust the central bank versus predictions that are actually better than what reality ended up being. Which leads to the second part, where the extent of reverence and trust might not only be a factor of the actions of the central bank itself, but also a factor of the actions of all of the surrounding actors and the proliferation of surrounding actors. So if a more sensationalist actor, which could be somebody on TikTok, is producing, or X is producing much more extreme predictions that maybe are wrong several times, but get right the prediction when inflation went really badly, and that stays in people's minds because the central bank got it wrong. From that negativity bias, you shift your allegiance and trust to, oh, the central bank got it wrong when inflation was really bad, but this guy got it right because the guy was just consistently quite sensational. And then that connects a little bit to how this reverence is born. And it kind of comes back to topics that keep emerging in these conversations. But let's say 20 or 30 years ago, there was also only a certain limited amount of means through which to get to know of experts. You had the news broadcast and the newspaper, and the ease with which, at least from what I see, the ease with which individuals now claim trust and reverence of someone that they see as an expert, who, with very little exaggeration, might actually be someone that they see on TikTok or YouTube or Instagram. It's its counterforce to the expertise that we accord to an institutional actor. Not only the inherent qualities of the institution itself, but its relative position relative to all the other actors that someone else is looking at now, because maybe they're not picking up the newspaper or not turning on the TV, and you've got a totally other channel that is your source of expertise in how you see it.
You know, your question provokes so much, and I don't know that we have the things to hand to answer them. In the in other disciplines, sometimes in economics, the concept of performativity is used, like to kind of suggest a similar dynamic to what we're talking about. Oh, Olivia, did you want to speak first? Okay.
Maybe.
Okay, you speak
maybe I
next.
can. Okay.
Go ahead.
Now, okay.
Yeah, and I'll come back to your
yeah,
question.
okay, thanks. I think this question, as well as the question about fogging or not, the debate on monetary policy, I think they're very provocative. Maybe one thing I would say would be that the role of think tanks or alternative understandings of how monetary policy works or can be wrong is to break with the restrictive set of alternatives that are presented by the monetary policy authorities and some hegemonic fractions in the economist profession, so to speak. And what's interesting when we read the monetary policy reports is that there is a certain restricted set of causes that are taken into account when they are modeling the inflation rate and the evolution of the inflation. But other factors, other causes are that are sorry, the word is losing me, but other factors that people put in the debate that I'm thinking about the seller's inflation work by Isabella Weber and other works that are saying that inflation could have been brought by also sellers dynamics and monopolistic nodes in the supply chains and these kind of explanations. These are not necessarily taken into account when predicting, and this is reflected in a restricted understanding of what are the monetary policy tools as well. So if we take a restricted set of causes, then we have restricted tools to act on these causes. So maybe there's I agree with the risk of sensationalism and the risk of multiplying erroneous understandings of the inflation dynamics. But as well, there is a certain need to break with or expand our understanding beyond some or orthodox restricted understanding of inflation. That would be a good contribution that some think tanks, alternative views that present alternative views are making.
Dana, do you want to come in, or Ellen, do you want to add something? Apologies.
I can circle back. Go ahead, Sana.
It's another question, so I would prefer that you would way to the previous one, so that
right.
I'm not intruding in this one.
Okay, good point. I have forgotten. So Mira, you had asked the question in terms of like kind of it, in effect, like how do we understand what sorts of, say, forecasting errors would ultimately result in you withdrawing the epistemic authority you attributed to that source? And as the performativity literature has taught me, it's always predicated on all kinds of so-called conditions of felicity. Do I understand that they were doing their best? Do I understand that, this that I have an alternative that I think is equally credible as an epistemic authority? Do I even just kind of what we have come to think that empirical work can accomplish? Should it have so anyhow, all of this ensemble of conditions impacts, I think, the way our judgment is formed about what's credible and what's not, as does social conventions about that. If I am given to understand by the media or wherever that there is a certain kind of authoritative commentator, and I note that others seem to regard them as authoritative, there's a degree to which I hope that the popularity of that commentator signals the value of their advice. So I check how many tick marks there are on their social media feed that tells me how many people consult this person. So it's super complicated to understand what might or might not rupture this epistemic authority. Okay, sorry, go ahead with your question.
Yeah, thank you so much. This was actually excellent, additional remark before I jump with my question in, because I wanted to just to go back on this, on these sources of expertise and, this trustworthiness or the bestowed trust, that I see it not simply as a psychological issue, but increasingly so, and I'm, a bit from a governance field, is that it's about, okay, how sound is the public investment in this growing number of expertise hubs. And here, I'm not questioning these expertise hubs, and new institutes, new excellence centers, and all that. But it comes as a valid question to the public, yeah? Why fund yet another expertise hub or maintain the existing expertise cell if the only thing, okay, not the only thing, but oftentimes they come with unpredictability. So basically stating that things are unpredictable. Here's our forecast, but it's very unpredictable. So maybe this forecast might be trusted by, 30%. Yeah. Trustworthy. And then, there are all these interfering elements Olivia nicely also referred to. Yeah. There are other actors coming in and then, like shaping, the dynamics that are not actually factored into the initial, let's say, prognosis. Yeah. Delivered by, let's say, the central bank. Because why I'm asking this is it is somewhat easy when, for example, let's say mostly private run universities establish a new institute. Yeah? I mean, it's privately funded, maybe with some public co-funding, but then it's somehow you see, okay, there's a market interest into it, because there are, enrollment of students, student fees. Okay, there is some kind of a market logic why they are perhaps, establishing a new expertise cell where there'll be new forecasts, new analysis, new predictions published. Yeah. But here I'm going back to where we are mostly, located, for example, in Europe, to the public institutions, to, let's say, these banks, their expertise cells. And then also, I really like the fact that you mentioned IMF, as like a source also of authority. IMF gave, the credit of, good performance to the bank. And so here I'm coming back, what is the role of like, these international institutions as well as, in enhancing the bestowed public authority of national institutions? Because they also have their mandates. So those mandates do not equal the national ones, right? But they can somehow boost or alter the standing of public national institutions within their respective countries, or perhaps even internationally. Why I'm asking that is because, for example, when it comes to inflation, in Europe, we have this fantastic situation that we don't have simply national banks. For Eurozone, you can also check European Central Bank, and also European Commission has its own, for example, experts at the Joint Research Center of the European Commission, who are also giving their forecasts. Yeah. So it's like there are multiple sources of expertise. All of them have slightly different mandates. So when I can consult, parallel expert opinions, in that sense, I would say that in these public international bodies, I gain less of a fog. I gain more of a defog, because I can factor in their mandates when I'm reading their forecasts and their projections. I'm so sorry, I didn't come up with, a straight question, but I hope you understand where I'm coming at. So it's not just psychological trust of public, but when public questions, okay, why do we allocate more public funding to yet another expertise cell or an existing one, etc.? Thank you.
So like optimally, there'd be this like kind of marketplace ideas and interlocutors of the different perspectives who would kind of engage and improve and whatever, right? But and if they were like completely easily decoded as to their particular orientation, then that would make it easier for us to sort of think, oh, I want the think tank or the institution or whatever that stands for this perspective. But it's just these things can be buried so deep in the way they do their work that it's really not obvious. Like we have lots of think tanks in Canada that say, we're all about the welfare of Canadians. Like I have no idea what that means, right? But like it sounds great. So like it how do I know that I've got an institution that aligns with the preferred perspective I have? Anyhow, I know we're getting close to the end of the time, and Gabby, you got your hand up.
I actually still have a question. If you would give us some more minutes to discuss, I'm wondering, as we discussed, and that links a bit to what Sanne just said. I'm wondering about the case study. So if we're going through this let's say, verification of my trust in an institution, the expertise of an institution, and go through the steps that you said. The assumption that an expert is not has no political motivation, so it's an advocacy-free expertise, and I'm reflecting on why there should be authority, and then I bestow this trust in the institution. If I take that as the main argument, I would say that central banks don't fall under these characteristics because their authority comes from their political position. So it's basically, and really roughly spoken, it's totally irrelevant if they are wrong over a longer period of time because they are making the interest rates. That's what one could say. It would be good if they were experts, absolutely. But would it matter to the mandate? Would they have less impact on monetary policy? Would people run away from central banks as the political actors who decide on that? I'm wondering. And the second part is expertise relevant for whom? So inflation projections is a form of knowledge that is relevant for a particular group of experts, I assume, which are then again financial institutions. So those are literate in the projection arena and can read the inflation projections with this political function in mind, I assume. And given that central banks have the political mandate, I would think that Santander or Citigroup or JP Morgan wouldn't start campaigning, we have the best inflation projections, because it's irrelevant. I'm wondering if central banks are a good institutional case study for this, for the trust question and this for the reverence effect. But that's maybe my illiteracy on maybe the Canadian case is different. That's
maybe just a little word there. I partly agree with the comment. I think it's a good thing we have to reflect on, but it's also true that in monetary policy circles, they're more recently investigating the effect of projection and central bank communication on other publics than financial literate publics. So they're very much interested in how just normal people and businesses as well are hearing the projections and the communications, central banks communications, to set their everyday behavior and their own expectations. So this would be a little nuance about this. So if they themselves are interested in their effect on other publics, I think that would indicate a nuance here.
Would you think, if I just can have this add-on question, would you think that your research, because that's the impression that I now have, sorry, lowering my hand, that your research actually tells us these political institutions need to beef up their expertise? The variation need to beef up their expertise. They really need to project better. That's the takeaway that I have, that maybe they are a bit too comfortable on the couch of their political authority, so that they are neglecting their expertise, their financial expertise in projections.
A couple of things. Your, I think, second question, which was the sort of expertise for whom thing, like, okay, we could have told a story where basically it's this financial literate public that's accessing this, and we can presume that they have the critical faculties to parse assumptions or, you know, whatever that might make them be able to sort of competently allow for, you know, things in the forecast and come up with something that works for them. The thing about this is that, like, central banks are positioned in an economy in ways that even those who don't access their forecasts directly get influenced by them. For for example, I have a pension fund. It's predicated on 2% inflation, right? Without my actually even knowing, like, how did they get that? It is sort of baked in because my pension fund regards the Bank of Canada as the best indicator that should work from. So it can filter down through investment advisors and so forth, where people don't even know what the Bank of Canada said, and yet their behavior is in some way embodying that advice. Should they just get better expertise? I mean, they always should get better expertise, right? I'm never going to say, yeah, you're done. That's all we can learn. But the point is just that, is there something, some incentive structure that in some way messes with that? Sorry, they really want to get in touch with me. That some way messes with their determinations of what transparency is, such that it does make a difference in what information they give us, right? So it's not that they lack competent forecasting skills. It's that they're going to be kind of inclined to take a more optimistic or more pessimistic, to regard data in certain kind of ways that are favorable to certain kind of conclusions. You know, all of those decision-making points along the way, which might, you know, suggest a more optimistic, pessimistic prediction. And what was the last thing? I just wanted to make sure it's absolutely clear that there's a difference between the authority invested in a government body that has to fulfill a mandate versus the epistemic authority, which is a very kind of subjective thing, which is about, you know, do I believe, as opposed to, like, you know. So, yeah, we might bestow trust because the fact that they're a government body connotes for us that they must be very good at this.
But isn't the independence of central bank exactly that marker for the trust?
I think it's
at least in the
absolutely
European
intended to
debate.
be.
Yeah.
But like, it might be, let's say independence works great and they're not contaminated by any political influences. They still might be incentivized to produce an inflation forecast that suggests the expectations they want. So that's still, like,
because
regardless of their independence, their expertise and all of that, they could still go along the road I'm describing.
Yeah. Yeah. Which is more likely when it's in their political mandate. That's so interesting, actually. And a bit concerning, I don't know, but eye-opening over such an important institution of political systems. Right. That's really interesting. Where do you stand in the research project in terms of results coming out?
The paper that we've just presented is in submission. So we'll see what happens with that. And then depending on time, inclination, and institutional incentives and other things, we may pursue some portions of this research, but, you know, it could kind of explode. So we're trying to figure out how to be strategic about what we take on. Great.
Thank you so much. And please let us know when the paper is out. I would be really, really interested to read it. It was really interesting. Great work. Great work.
Right. Thank you for the invitation, and thanks everybody for coming.
Thanks a lot. And to anyone still with us, a hint towards our next meeting, which is on 9 July, usual time 1:30 to 3, on a topic whose title is No Demographic Projection is Ever Neutral, Uncertainty, Model Choice, and the Politics of Population Forecasting. So if you are interested, you're all very warmly invited to join. And for today, thank you very much again to the two speakers and to the participants for joining.